The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the February 13th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that, well, is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I am absolutely grateful for your presence here. But more important than that, that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send that out to Steve at TFNN.com. Inside the subject heading, please put radio show question. And of course, if you're inside our Tigers Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day with a slightly mixed bag out there. The mix is coming from the transports, which are trading to the downside. They're off about 65 points. The other U.S. indices are trading to the upside. You've got the Dow up about 0.33%, 146 points, about 0.7 for the S&P, 40 points, a little over 1% for the NASDAQ, 235 points there, 0.25% for the Russell. That's a 5-point move. You've got gold that's trading up 19 bucks, 0.6% to move to the upside, trade at 29.47. Silver is basically flat. It's down 7 cents out there. Light sweet crude off 25 cents. Print out 71.12. Look at natural gas is on a tear, may form a gigantic, a fairly large A to B equals CD pattern to the upside. We can certainly take a look at that out there. As we take a look at the sectors inside of the S&P 500, the only one I see trading to the downside is the industrials. That is off 0.13% out there. The chart that I've got up on my screen happens to be Newmont Mining. Subscribers and I got in at the bottom of this trade out here. And what you'd love to see today, this is the number one weighting inside the GDX out there. What you'd really love to see is for Newmont Mining, which it's doing right now, to close above yesterday's high. Yesterday's high was its TD9 count high. And that level's at 47.02. We're at 47.13 right now. If we close above that, that tells us about a strong upward momentum move that's in place inside of Newmont Mining. It could even tell us that it's getting ready to go target its TD9 count breakdown level up at the 56.40 area out there. Now, Newmont Mining is trading above its TD9 count top. The weekly time frame, by the way, this would be number 7 weeks in a row to the upside for it. Monthly wise, it's just a 2-bar move. Now, the next level of resistance really for Newmont Mining is the top of that monthly profile, and that is at the 47.60 area. So you take out the TD9 count top today, you still got to deal with that 47.60 level. If we put up the GDX as an example here, to my recollection, it is not taking out its T9 count top yet, but it could. I think it was yesterday that it completed its pattern out there, but let me just, too many things going on. And no, it was a couple of days ago that it completed its pattern. It was on February the 10th out there. So the high that it's dealing with is 42.21, the top of its profile, 42.21. So that's its battle. But if it can close above 42.21, that's going to suggest that we continue to head higher. Now, on a monthly basis, unlike the Newmont Mining, but on a monthly basis, the GDX is already traded above the top of its monthly profile. And it's trading into its all-time swing point high from October of 2024 out here. That had volume there of 453 million shares. We're only the 13th And we're at 157 million shares. 157 going into 450. Sounds to me like it's lightish type volume as it goes into that level. You can see a 30-minute Rhodes Momentum Indicator pattern with price consolidating with inside the profile. That's the bottom right-hand panel of the chart. So that's what's going on. We take a look at the mining sector per se, the GDX. Boy, did I do a bonehead thing or what? Here's the bonehead thing. I made Valentine's Day reservations, which I don't often do, probably for good reasons. You know which day I made it for? Tonight. That was the craziest thing. I was amazed when I actually looked at my calendar yesterday and realized that Valentine's Day was Friday, not Thursday out there. So that's kind of going to be kind of an interesting thing. All right, so let's do this. Let's continue. I don't think there's anything else here. Well, let's just do this. Let's put natural gas up real quickly. Let's put up its charts. We're looking at the March contract out here. We're seeing that natural gas right now is taking on a swing point on its daily time frame. We'll populate that. These charts will populate in a moment. And if it's able to close above, in fact, I'm going to open up the daily chart as soon as it opens up here. So we're trading above its TD9 count breakdown level on the daily time frame at 358. So that's a nice bullish thing out here. It had a nice TD9 count bottom pattern. And it looks like if price can close above, this is the high from the trading day of January the 16th out there. That is at $3.77, $3.78. If price closes above that, you're going to get one gigantic A to B equals CD pattern. It will look something like this. We start with the Rhodes Momentum Indicator bottom pattern from November the 4th. We take it all the way up to that October high. Again, this is the daily time frame that we're looking at out here. And we're just simply going to copy and paste. We're going to certainly try to do that. We got the copy. We got the paste. And now we're going to simply go to that TD9 count bottom. So the 1-to-1 price projection for natural gas will get us up towards the $4.23 mark out there. Remember, this doesn't happen until price closes above the high from January 16th, 3.778. We're at 3.755 as we speak right now. So watch that on natural gas. Looks like that is kind of one of the trades of the year, so to speak. We're really up off of the floor, really up off of the bottom there. Light sweet crude, it's just a... it continues to test the bottom of its profile. We'll put this chart up here on our screen right now. At the bottom of that daily profile is held. It's a buy zone that it's dealing with. It was trading below it earlier this morning, but you can see that prices pulled back in here. So what we're watching for is no bottom signal or anything along those lines here, but you're really watching that 70.91 level. Price closed below 70.91, odds favor a move back to the 68.94 area, the place where it broke out from. The March contract for its weekly time frame has support at 69.24 out there. And so that's it with regard to light sweet crude. If we take a look at, let's go take a look at the equity future contracts. Let's take a look at each of them here, see what they're communicating. If you take a look at the ES Mini, you can see the ES Mini is trading above its green oscillator and change line and running right up into trend line resistance. The NQ, on the other hand, has taken out trend line resistance. It's now going to deal with this swing point right here. The last one of the last bastions of resistance would be the high from January 22nd, 22.093.50 or 22.042. So that's going to be the next resistance point, but you actually have resistance right here. That's the high. That's the one from December 26th, 22.111. Those become those price targets to the upside. You're still consolidating inside the Dow Equity Future contract. Nothing really changing there, and nothing much inside of the Russell 2000 Equity Future contract either. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. I know Spin in the Tiger's Den has it nailed down. He said, hey, the reason you probably got your reservation was because it wasn't Valentine's Day. And I think you're dead on. You know, in fact, when I made the reservation, thought it was a little late in the process there. And, and they said, yeah, no problem. And I was like, oh, that's really pretty cool out there. And then, of course, I found out that that's not the case. So we're now eating tomorrow at 5 p.m. out there. My wife looked at me cross-eyed. She said, are you sure? Maybe we should do something else out there. And to get to this place, that means we got to leave by about 4. And we eat early. We don't eat that early, though. In any event, there was a question out here that just kind of I'm sure you were right there. No spin. If there was a question that came in earlier, I think it was from Duncan Steve, just said a general overview of the markets out there. So I'm just going to try to make it as simple as I can. Now, those of you that didn't catch a day or two where I shared with you line charts of all the major markets, which would include the DAX, the FTSE, the Dow, the S&P 500, a few others out there, is that when major tops form, they are all forming at the same time. So that's the first thing. Number 2, when a major top forms, you will get a topping pattern on the daily, the weekly, and the monthly time frame. The daily, the weekly, and the monthly time frame. Right now, we're taking a look at the German DAX. The German DAX, which gapped up today, has no topping signal in sight for its daily, its weekly, or its monthly time frame. That doesn't mean that something can't transpire, for example, at 1 o'clock this afternoon, and that all these things reverse and they get candlesticks over there, whether it's a weekly, a daily, or monthly time frame, to change that. For example, on the monthly time frame, you can clearly see the A to B equals CD pattern to the upside. So that needs a bearish reversal candle to confirm a top out there. The weekly chart has a Rhodes momentum indicator signal. That still needs a bearish reversal candle to confirm a top. And the daily time frame, well, it's in an A to B equals CD pattern. If we were to gap down, for example, tomorrow and leave an island reversal, that would change the picture of the story. But right now, the DAX has no top, daily, weekly, or monthly. This is not. I know that I can't believe the number of emails I still get. People saying I'm dead wrong. Well, maybe I am dead wrong, but I just propose I send back to you. Have you studied the DAX from 2000, 2007? Go back even farther. Have you studied what patterns are present at all-time or at tops out there inside of markets? How markets form those tops out there? And this is not it. So at this stage here, we've just got some sideways consolidation. And quite frankly, we're trading inside of January's monthly candle out there if you take a look at the Dow. So if you want to understand support and resistance or which way the market is going to break out there, Duncan, I'd say just watch the high and low of January. Right now, we're just consolidating with inside that. That probably will give you the biggest piece of information out there. All right, so let's go take a look at. So that's my take. And I will not move an inch from that take because of the amount of work that I've done in identifying the patterns that are present at those major market tops out there. And they are not in right now at 1121. And Stevie will change his decision at 1122 if the information presents itself. Now let's go to some of the requests that have come in. The first one coming in from Robert B. And Robert's looking for a long entry into the USO out there. So when we look at USO, we don't have any kind of a bottom signal. We do have a wave number 6 that has triggered. It triggered back on the trading session of February 6 out there. So if price is able to tick below that low, Robert, that low is 75.27 out there. That would then trigger wave number 7, letter G on my screen out there, and that could be a bottom signal. Right now, we just have price consolidating with inside its daily profile. The buyers are doing what they're supposed to do. The buyers identified themselves to you and I back on the trading day of February the 7th. February 13th out there, and the bottom where the buyers are located, 75.62. We got down to a low of 75.46. We're trading right now at 76.22. So they have done the work. You know that those are where the buyers are at. If they, in fact, fail, in other words, if price closes below that level, I would suggest to you that your entry price might be down more towards 72.90 out there. And of course, if it gets to wave number 7, it needs a higher low in order to confirm that pattern. So that can go on for days out there. On a weekly time frame chart, the weekly time frame shows that price is pulled into, let me just make sure I've got this right out there, 75.83. No, price is, well, trade, oh, wow, interesting. 37. Oh, I see it now. So price is traded above the top of its weekly profile. So that was tested last week, and again, it's being tested this week. That's 75.83. That's another number for you to watch. If price were to close below that level, get back inside its profile, that would then tell us about a move back towards 74.37 or maybe even potentially 71.45 out there. In the weekly chart, monthly chart, you see just sideways movement. This has been consolidating sideways ever since February of 2022 out there. So the USO, in one sense or another, you could almost say is somewhat dead money out here. It's been trading basically between 59.97, maybe all the way up to 92. Now it's a pretty decent range out there. Right now, we're right in the middle of that range. So no idea which way that this is going to break out there. So I don't have a clear signal as to a bottoming pattern. You're looking for a long entry, but I have given you what I've given you in price holding support on the daily and the monthly and the weekly time frame out there. You also wanted to take a look at XOP. So let's go see if XOP is giving us any better information on that. And as we take a look at its chart, it is trading below the bottom of its daily profile, trading below yesterday's low. It's suggesting that it wants to make a run for its TD9 count bottom. That TD9 count bottom formed on February the 4th out there. There was a bar following bar number 9. The volume on that candle session was 4.7 million shares. So you already got your bottom signal. And the price rallied right up into resistance, which was the bottom of its profile. Now it's below a red oscillator and change line. That's really not great action out there. But it's trading into that swing point from February 4th that has 4.7 million shares out there. And today it's done 774,000 shares. So you're moving into that swing point with lighter volume. Maybe that will hold. But that would be your bottom as price gets down into that area. And as long as it stays inside that swing point, odds favor that at least test that bottom. On a weekly time frame, if I just move this, scrunch this a little bit, we see a lot of sideways action. Just have a consolidation with inside its profile. 127.05 at support, 147.29 at resistance. Monthly profile consolidation, 127.96 support, 158.65 as resistance. So this has a little bit better bottoming signal that you actually have a TD9 count. Your concern out here, Robert, is the mere fact that price rallied right up into where a counter trend rally would come to an end. And that was at the 140.17 area out there. So I hope that helps you out for both of those positions out there. And as always, thanks much for taking the time to write in. David in Panama City is curious about Tesla. And he's got calls at the end of February and is looking for what that outlook might be. I would say the outlook, at least at this point in time, you can see the daily A to B equals CD pattern to the downside. It's basically completed. It's waiting for a bullish reversal candle to confirm a bottom. We don't have that today. We didn't get that yesterday. But we are trading above yesterday's high. I would say odds favor that Tesla's going to make a run for 370-ish. 370-ish is its oscillator and change line. Now, it may be able to take that out. And if it does take that out, David, it should make a run for 389.29. Now, although the daily doesn't have the bottom, the weekly chart, we can see that price moved down into its bullish structured buy zone, 327.15 to 345.08. Since that held, the idea of running up to 370 is very likely. If you get above 370, it looks like the move would get you towards 389 to 402. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're taking a look at Broadcom out here. AVGO is its ticker symbol. It is trading above profile resistance, but below its oscillator and change line out there. It doesn't have a topping pattern. If it were to tick above, today, 237.93, it would trigger a TD9 count pattern. But you'll see a TD9 count out there, but it's not the type that identifies a top out there. So we just have a sideways movement above profile on a daily time frame. We're consolidating with inside its weekly profile. We're in a breakout mode on the monthly time frame. So all-out breakout mode on monthly, consolidation inside the weekly time frame, and the daily just sideways movement out there. Not much more than that there, Duncan. Let's take a look at the SMHs. What are they doing? Let's try to get to the SMHs. Why didn't that work? Try this one more time. And there we go. We take a look at the SMHs. The SMHs, if it can close today above the bar from January 31st, the high, 251.46, you're at 251.19. It'll trigger an A to B equals CD pattern to the upside. Doesn't get you that much further to the upside. It gets you up to the 254 level. What price is doing right now, it's testing the level where counter trend rallies come to an end. So you really want to see it close above the bottom of that profile, and that number today is at 250.57. Not only is it today, it'll be here tomorrow too, unless there's a new profile that forms. So that's the first thing to be watching. Consolidation inside the weekly profile. It's got resistance up at the 256 to 258 level. And on a monthly time frame, you're at resistance right now. It's oscillator and change line. So here's the struggles. You got 251.78 on the monthly, 250.97 or so, or 57 on the daily out there. So that's what it's dealing with there, Dunk. It's just dealing with resistance out there, but it is trying to push through those levels. Let's take a look at the next request. I think if I have these in order, I might have really screwed that up. Lord knows I screwed up Valentine's Day. No reason why I can't screw this up, too. Take a look at AUR. AUR is having a very nice day. It is trading above its green oscillator and change line and its daily profile. So it's in bullish breakout mode, but it's really neutral because it did confirm a Rhodes Momentum Indicator top. Now, price is trading into the swing point from the trading day of January 7th. 98 million shares that day traded hands. You're moving into it with 16 million shares already, but that's quite light compared to that swing point. Nonetheless, if price is able to close a day inside, that means above 815, you're at 857, odds favor you still go and test that swing high. That swing high, by the way, is up towards the $9.83 level. On a weekly time frame has a Rhodes Momentum Indicator top. That pattern would be negated with a close above 805. You're at 857. So tomorrow you want to watch 805. If you close above that, you've negated that signal. You're in all-out breakout mode, and that says you do get back to that swing point high from back in January. Now, on a weekly basis, volume was 152 million shares. So far, we're at 56. You can see how light we're coming in. And the monthly time frame chart for AUR, likely going to go ahead and confirm a TD9 count top this month and complete that pattern next month out there. So, Rye, hope that helps you out, and thanks so much for your request. Dan wanted to take a look at ticker symbol RANI. RANI right now is trading at about $1.76. It ran into resistance this morning, Dan, right up at the top of its daily profile. So those snipers at $1.82, that's where they're sitting. If you can take that out, that would be a beautiful thing. However, you've got additional resistance. Now we look at the weekly time frame chart. Let's scrunch this, or let's widen this up a bit. You can see here a nice TD9 count bottom. That TD9 count bottom forms the week of January the 17th. And now you've had price rally up to where counter trend rally would come to an end. And that was the bottom, or the bottom and center of its weekly profile. That level is between 185 and 199. So you really need to see this on a weekly basis, close above 199. If you do that, tells you it's more than a counter trend move. You would have another battle at 226, followed by a battle at 267. On a monthly time frame, Ranny, if it can form a bullish reversal candle, it'll have a monthly Rhodes Momentum Indicator bottom pattern and suggest a move to 251. So right now, just a consolidation inside the daily profile out there. Doesn't look like it's going to take it out today. This will be 2 bars likely to the upside, so it looks like you're getting ready for maybe a 2-bar move to the downside in ticker symbol RANI. The next request was to take a look at ticker symbol AGEN. And AGEN is running into resistance this morning in that it's taking on its green oscillator and change line. Green oscillator and change line tells us that that his price oscillator is above zero, so that's a bullish condition, but it gets really bullish if it can take out 348. Instead, that's acted as resistance. Now it's testing potentially support at the 332 level. The actual top of its profile is 332. So it's trading in what I call undecided zone out there. It is undecided on the daily time frame what its next intent is out there. Let's see if we can figure out what is going on the weekly time frame. Weekly time frame says just a sideways consolidation. And it's just in between the bottom and the center of its consolidation. The top of that, the top of the profile, I should say, is at 491. This has been consolidating, let's say, since November 22nd between 274 and 395 out there. Finally, we take a look at the monthly time frame for AGN. We do not see any kind of a bottom signal here. We see a negated TD9 count bottom pattern. So I like Randy better than AGN out there. Let's see, did I get enough time to put in TVGN? It's another request out there, and I did not. It was IBM. Don't think we were interested in IBM. Let's go TVGN and see what we have out here. This should be able to pop it. Yeah, we've got about a minute and a half before we go into the break out there. So just give us a second here. We'll get this populated. It's printed at $1.60. It's trading with inside its bullish structured daily profile. Dan, that's between the range of, your buy zone is between 135 and 142. The sellers are residing at 192. Price should be able to make its way up towards that level. You're trading inside a swing point from back on the trading day of January 27th. 58 million shares. Yesterday you got into it with 1.1. And today so far, 591,000. So it's not like you're pushing that swing point with volume, but you are inside a bullish structured profile and you're in a bullish breakout mode. Price should try to get up towards $1.92, unless we can find some other resistance out here. If we look at the weekly time frame, it's also to $1.92. If we look at the monthly time frame, it's got a beautiful TD9 count, Rhodes indicator bottom. Says that over time, price wants to get up towards 438 out there. So that was Randy, AGN, and TBGN. That was for Dan inside the Tiger's Den out there. I know I don't have this one in here. This is for Eddie. He wants to take a look at APP. So let me type that in, see if this will pop up before we get to the break in the clock. That's about another 15, 20 seconds from now. APP gapping up, trading out at 488.58, looking very good. It's negating a daily TD9 count top. It says it wants to head higher. The weekly time frame chart negating, it looks like a TD9 count top, but close tomorrow above the high of 417.64. We'll do that, and the monthly time frame has got no topping signal. So this looks like APP wants to head to, let's call it Mars out there. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at the charts here for NVIDIA. The daily time frame is what I'm going to focus on here first. If we take a look at yesterday's price action, we can see that it completed a 2-day knee-jerk reaction low. 2-day knee-jerk reaction low out there. So we like today's price action. The issue that NVIDIA has right now is we don't know if this is just a counter trend move or not. And the reason we don't know that is because price is taking on a resistance level, the bottom of its profile. This is where a counter trend move would come to an end. That's at 135.76. We've been up, we're at 135.29 right now. We've been up as high as 136.50. So you really want to watch that. If you can close above 135.76, it increases the odds of a move higher, with the next price target being around 139. 139.62 would be the center of its profile. This is going to become bar number 7 today of a TD9 count. So this could be getting ready to set up a TD9 count top between Friday and Wednesday of next week out there. We'll have to come back to that. So it's really the daily that's dealing with profile resistance. The weekly says if the daily can make its mind up and get through those sellers out there, then it wants to move up towards 143.11. And on the monthly time frame chart, there's really nothing bearish about it at this moment in time. Yes, it does have a Rhodes Momentum Indicator top. It's got a TD9 count top. But price is above. It's trading with inside its profile. It's above that green oscillator and change line. So some of the signal is somewhat neutralized out there. So it's all about the sellers. Used to be buyers. Sometimes buyers can become sellers out there. Support can become resistance. So the level to be watching out there, Eddie, is 135.76. Hope that helps you out with regard to NVIDIA. Next request was to take a look at BA out here. So let's pull that up on our screen. We are looking at this taking out a potential swing point out here. At least it's trading into its swing point from January 28th. 22.7 million shares traded then. Today so far you're up with 2.7. So really light. Now the high on that candle session was 188.48. The high so far today, 188.24. So it hasn't taken that swing point out. In other words, it hasn't tested that. So we won't have a test and rejection, at least not as of 11:44 at this moment in time. But you're trading into that swing point. The weekly chart shows that a close tomorrow above 182.57 would be a close above profile, would be a profile change in trend signal. Now, it would also offer a potential A to B equals CD pattern. Its swing point to be used for that A to B equals CD pattern is December 27th, the week that ended. 25 million shares that week that were traded. We're at 18 million shares this week. That was a holiday week. We're not in a holiday week. Nonetheless, even if it's light on volume, it can still trigger that A to B equals CD pattern to the upside. I'm just simply going to move that A to B leg over to the C point, and that would then suggest that price can get up towards 210. First things first, though, price has got to take out that daily swing point from January 28th, that 188.48 level. If it does that, then the 210 area comes into play out here. There's nothing on the monthly chart to stop that from happening. In other words, prices trade above both its oscillator and change line and profile resistance. So it's really about the daily, but it doesn't have the volume. So that's what we're looking at on BA. You were asking, I think, about A to B equals C to patterns the upside. It's most easily seen on that daily, I'm sorry, on the weekly time frame. Electric Light Orchestra, Mr. Greg Lynn wants to take a look at Halliburton. HAL is the ticker symbol. So Halliburton forms a TD9 count bottom pattern. Let me kind of slide this down like that. There we go. Oh, that didn't work, did it? There we go. So we can see in Halliburton, well, this whole thing got all screwed up. Nice job there, Steve-O. Sorry, a little bit of maintenance here, a little bit of decorative work. Make these charts look good. There we go. So now we take a look at the daily time frame. We got a nice TD9 count bottom that forms out here back on February the 4th. It rallies. It's just why did it find resistance where it did? The only answer to that question that I can visually see is the weekly oscillator and change line, which price is trading below right now. So that is really acting as resistance out here on the weekly time frame. The daily might actually be acting as support. Price is sitting right on it. When I say it being $25.90, that's where we're trading right now. So it's consolidating inside its daily profile with a TD9 count bottom. If price closes below $25.91, it likely gets back to retest either $25.53 or the TD9 count bottom. If it can hold this level here, then it has to wait to see if it can clear 26.31-ish. If it is able to close above 26.31, then we likely see 27.11 out there. On a monthly time frame, Halliburton is going to go ahead, it looks like, and going to go ahead and confirm a TD9 count bottom. It'll accomplish that task as long as price is able to close below 27.74 at month end. So that's what it needs to do. So if you're wanting to be long Halliburton, you're actually hoping for it to not do too much until after the end of the month out there. So that's what I see. We take a look at that. Hope that helps you out, ELO. Hector writes in, and he would like to take a look at the U.S. dollar index. Now, I don't have my data feed that would give us live data. That doesn't mean that what we're looking at isn't valuable, because it is. So here's what we have going on right now, Hector and Patty. And that is on the daily time frame, you have a Rhodes momentum indicator top that led to a TD9 count bottom, and now we just simply have a consolidation with inside profile. And that consolidation zone is between 107.28 and 108.30. That is a daily time frame. On the monthly time frame, we don't have any kind of topping pattern at all. Nothing that I can see. We just have a consolidation with inside its profile. Its profile has support at 105.86 and resistance at 109.55. And on a monthly time frame, I do not see any kind of a topping pattern either. In fact, we are trading with inside its profile. It's a bullish structured profile. And typically, once you trade above the center of its profile, which is 104.90, price will make its way up to 114.74. So longer term, I believe that is the message of the U.S. dollar index, and that it wants to go target that 114.74 level. It first has to get through 109.32, the daily TD9 count breakdown level, 109.54, the weekly top of its profile out there. If that's what its intentions are, or at least appears to be its intentions at this moment in time. If we take a look at what's going on with regard to the currency pairs, three of the currency pairs that make up the U.S. dollar index, do I have those? I do. That would be the euro on the left side. The euro right now, if it can close above, if it can take out the high from about a week ago, the trading session was February the 5th out there, and if price can close about 1.0442, you're at 1.0436. That would suggest to Stevie that price should go target its TD9 count top and its TD9 count breakdown resistance level at 105. If it does that, U.S. dollar index should get weaker. In the case of the Japanese yen, you've got a confirmed buy the D point pattern. Price right now, though, is below that red oscillator and change line. As long as it remains below that, Hector and Patty, it being 153.50, that's going to signal that it moves lower. If it moves lower, it's getting stronger. U.S. dollar index getting weaker. And finally, we have the Great British Pound. And the Great British Pound, if it's able to now, well, that was an old swing point. Steve would have to change that. So let me get rid of that blue line. And now, if in fact the Great British Pound can close above the high from February 5th, and that high is 1.255, that will trigger an A to B equals CD pattern to the upside, and that would take us towards 1.277. Now, if all that happens, then the pound gets stronger, the U.S. dollar gets weaker out there. That's what's going on a daily time frame with regard to the U.S. dollar, the euro, the yen, the pound, and then on a weekly and monthly basis, the U.S. dollar index out there. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're looking at the charts here for Marvell. This is for Yvonne. Marvell formed a Rhodes Momentum Indicator top. It did that back on the trading session of January 24th out there. The next day it gaps to the downside out here. And then we get a new profile that price is trading with inside. So it's trading with inside the buy zone. The buy zone for Marvell is between 102.32 and 105.11 out there. If price were to close below the low from January 27th, that would be at 99.52. That would trigger an A to B equals CD pad to the downside. That would be targeting the 71.77 level out there. On a weekly time frame, prices trade above profile resistance. That's at 100.33, but it's trading below its oscillator and change line. So it's trading between support 100.33, and resistance currently 115.93. And finally, on the monthly time frame, if we were to get a bearish reversal candle, that would generate a Rhodes momentum indicator top. We have to wait till the end of the month to see if that in fact transpires. You wanted to also look at Alibaba out here, so let's go take a look at BABA. This is trading above, it's in breakout mode on the daily time frame. Full breakout mode. So this should continue to move higher. The weekly time frame needs to just simply close above the top of its profile. That's at the hold on a minute here. No, that's it needs to close above 117.82. If it you're 118.60, you close above that. That says it wants to move higher. In fact, it'll trigger an A to B equals CD pattern to the upside out there. I don't have the time right now to draw that in there, but that's what it would do out there. The only reason I don't is there's one more request. I just have a few seconds. So that's what Alibaba is doing. Looks pretty good to me, Yvonne. And lastly, we'll finish off the show. Take a look at Hood. We'll look under the hood. Hood is negating a TD9 count top today, even though it shows up as a bearish shooting star right now. You've got a gap to the upside, so that is not really a bearish shooting star. It's negated. The daily TD9 count top says it wants to move higher. The weekly has no top in place. That wants to move higher, and the monthly the same thing. So it looks like Hood is going back to its all-time high. Should get you back to the $85 even Steven number. Folks, stay tuned for all the great programming. I'll see you back here tomorrow, 11 a.m. sharp. Have a terrific Thursday. And hey, during that break, I got the confirmation of my 5 p.m. dinner reservation for tonight. Hope you're right. Take care, folks.